Hello, everybody, and welcome to our FrontierView webinar on the 2021 outlook for the MENA region with a focus on the healthcare sector. While we wait for a couple of people to join the line, I wanted to encourage everybody to log in to GoToWebinar to view the materials that we'll present today. There will be quite a lot of data that we wanted to share with everyone. And of course, you're welcome to submit questions throughout. We will do a Q&A session at the end of the conversation today. To submit a question or a comment, please click on the Q&A box on the GoToWebinar application on the right-hand side of your screen, and then just type them to Dakar Frontier Webinars. Somebody will be looking at them, and we will circle back to any questions or comments that you have at the end of today's webinar. As an introduction, my name is Martina Balzagieva, and I'm Managing Director and Head of Research at Dakar Frontier. And before we get started, I realize that some of you might be new to FrontierView, and we'd like to take a couple of minutes to just give you a quick overview of our firm and how we work with executives of major multinationals. FrontierView provides the world's best market intelligence and advisory services for global business professionals. We help our clients grow and win in their most important markets by informing and empowering the market monitoring, planning, execution, and other critical decision processes of our clients. Today's webinar is an example of a lot of the work that we do to support the annual planning process, especially in a very challenging year where all the numbers are up in the air and a lot of uncertainty weighs on corporate planning processes. If we go on to the next page, we also wanted to highlight that we have continuous research and insights, custom solutions, and transaction support services through which we provide clients a small sample of which you can see on the next page with timely, actionable insights to adapt and win in changing markets. If you're not a client and are interested in receiving a 60-day complimentary access to our FrontierView program, please leave a comment in the chat box, and alternatively email us at info@dakarfrontier.com. And then finally, as part of our offering, we're excited to announce that we have recently launched a new mobile app, FrontierView Mobile, which is available on both iOS and Android, and it includes all the relevant content you need to monitor markets, including this webinar recording and the presentation deck, as well as commentary around some of the key developments that are taking place across major markets in the region. We encourage you to download the app to have access to these insights, and hopefully as you begin to travel again, that is a particularly good way of having all of the materials on the go. Current clients can access the mobile app using the same login information as our browser application. If you're not a client, you can still download the app and start monitoring up to 5 complementary countries and access other features like daily news and notifications. So now that I've briefly introduced our company, I'd like a moment to introduce our presenters today. We have 2 members of our research team on today's call, and they really will be the stars of the show for the conversation. First, we're joined by Zeynep Gossereysolu, who is our Director of Middle East Africa Research. And we're also joined by Mansour Al-Zahab, who is our Senior Analyst for the Middle East as well. Because Zeynep and Mansour are in constant contact with our clients, they will also be discussing not only the results of our research, but also what we've been hearing from multinationals who are being impacted by the coronavirus, as well as some of the insights that they're hearing from the ground. If there are any insights that you see today as part of the discussion or any questions that you don't get to answer, our client services team will be happy to follow up with you directly. Just leave us a note again in the chat box, and we'll be sure to follow up. And then to give you a sense of what we'll cover over the next hour or so, first, we've planned to focus on your top markets in the region, Saudi, UAE, Egypt, and Algeria, and to evaluate where these countries are in terms of the normalization period, in terms of how 2020 has impacted the outlook for the healthcare industry in these markets, and what that means for 2021 and beyond. Before that, we'll take a very brief look at our global assumptions, which underpin how we expect to see developments across the Middle East region. And we'll also spend some time looking at the MENA region as a whole and comparatively looking at the perspective across all the different markets. So a lot for us to cover today. I think it's time for us to get started, and I'll pass it over to Zeynep to get going.
Perfect. Thank you very much, Martina, and it's very good to speak to everyone on the line today. We'll quickly get started with the assumptions driving, as Martina said, our views and forecasts that we'll be sharing with you in the rest of the presentation. So firstly, from a coronavirus perspective, we expect that infections will continue to fluctuate in the next 3 to 6 months. New case numbers will not, unfortunately, always be in a straight downward direction, and that's going to cause some planning difficulties in terms of the fluctuations in confidence, as well as in the impacts, of course, on the healthcare sector. Second, although it seems that a vaccine discovery is highly possible within this year, a safe and effective vaccine and its mass distribution is, we believe, unlikely to occur before the second half of 2021. So you'll see that we're expecting more substantial recoveries in the economies of these countries more into 2022. And we have seen Russia give regulatory approval to a vaccine, and the UAE has also recently approved emergency use of a vaccine as well, that it has been testing with a Chinese firm for frontline workers. So there are definitely some activity happening, but these are limited in scope and their ability to really impact the overall economic outlook we'll be sharing with you. And in the meantime, the numbers and the views that you'll hear from us today don't assume a repeat of the second quarter of 2020, with nationwide lockdowns occurring simultaneously in major markets. But we do expect mobility restrictions to be implemented sporadically across your portfolio of markets. And we do want to use scenarios for key markets in the world that do take into account a downside and an upside with different assumptions. So we'll be publishing these in upcoming reports and in our global outlook as well. So definitely very important to look at some of the downside risks that you're not putting into your base case assumptions for next year. But within this kind of a base case context, all regions are returning to growth in 2021, but not recovering fully from the shock of this year. And you can see that the MENA region 2021 growth remains on average in line with the rest of the world. And this kind of a global demand environment is resulting in us to have Brent crude oil forecast, the annual average price to be around $50 per barrel in 2021 and moving up towards 58 in 2022. With these assumptions in mind, we also want to watch out for a few risks. The first one is the change, a potential change in foreign policy from the US towards the region, if and when Biden wins the elections in November. At Dr. Frontier, we do expect that there is enough of a likelihood that Biden can win in the next month that we need to plan for some of the changes in policy that might come from that. And probably the even more important risk beyond any political risk is actually if we don't see a substantial increase in oil prices going into 2021, if global demand really does not support a rise in prices. And this, of course, does weigh on the fiscal outlook for a lot of the countries we'll be talking about in the coming hours. And when we look at the MENA region with the countries individually, you see that most of them in this chart are returning to their pre-COVID levels in 2022. The chart you've seen in the previous slide shows a growth figure that is positive for most markets in 2021, but for these economies to potentially recover to their 2019 size, it's going to take us slightly longer than 1 year. Egypt stands out here with the government's decision to boost spending, and that's why we're seeing continuous growth in that market. And there are some obvious countries that are lagging, such as Algeria, which we'll take a look at in the next hour. And as we share our analysis with you, we look at the following factors that you see on this slide as we're preparing our outlook and our analysis on the healthcare system. We're looking at past trends and priorities in the healthcare sector, of course, the infection rates, but also how prepared the healthcare systems were and the fiscal impact of the economies, and of course, combined with that, political management and priorities that end up impacting health spending. Very important, lastly, is reliance on fee-for-service or other kinds of structures and patient fear and confidence around coronavirus as well. And as we are in October, currently, at this time of the year, we believe in this medium term, this normalization period with COVID. we have started to see some of the opening up of the economies and a gradual return of sales force to hospitals, a gradual recovery in elective procedures, but there's still quite a lot of fluctuation happening on all of these points that you see here, still ongoing out-of-pocket pressures, a very unpredictable or let's say fragile recovery on the elective side, and many other factors we need to consider around burnout of medical personnel, for example. So we're not really in this comfortably post-COVID period yet, and we want to look at how this period is impacting businesses in this sector.
So Zainab, it seems like we need to start with the discussion around COVID itself first, especially because more recently there have been fears around second waves. In some markets we have seen that, in others less so. It's a pretty mixed picture in the world globally, but of course also across the Middle East. So could you maybe walk us through that first as a foundation to both the economic and the healthcare view?
Yes, and you're very right that we have, the reason we're talking about all of this has been the quite serious impact COVID has had on the healthcare industry itself. Here on the slide, you can see expectations from that experts had in May for disruptions to operations across the main countries. But we don't have exact data on the latest procedures, but we know that there have been serious disruptions to non-COVID related procedures and visits within the healthcare sector. And that normalization period, as you've mentioned, really depends on infections, but also on the stringency of mobility. So what you will see in this slide are not case numbers, but the level of emergency response that countries are currently in terms of their mobility restrictions, their level of emergency economic support, health system emergency response levels. And this can give us a sense of how close the healthcare system is to normalization. And we can see that across the GCC, at least, Qatar is maintaining one of the most cautious approaches. And in the meantime, what we have started to see is Iran actually having to increase restrictions again after seeing a spike in cases. And we also see some easing of restrictions in Saudi lately, especially in September, but also in the UAE. But with a rise in case numbers in the UAE, it's possible that some restrictions could come back in this market. And outside of the GCC region, Iraq has also needed to keep formal restrictions high, but the implementation hasn't been as effective. And we see that the restriction levels in Algeria have been fluctuating alongside the fluctuating case numbers. And we do see that hospitals have slowly started to open up, but there's still quite a bit of fear around the infections. And Egypt, in the meantime, continues to ease those restrictions despite COVID-19 infections, and definitely a case of prioritizing the economy in the region. So in general, the main message here is across the Middle East and North Africa, even though we've entered this normalization period, the level of abnormal restrictions and regulations in the economies are far from the pre-COVID levels. And as long as COVID-19 is around, governments will need to manage the virus and economic impact simultaneously. After new cases spike, there's the possibility of a harsh lockdown that can bring these infections down, which we've been through in the second quarter of the year. But then a rapid opening up of the economies also creates the risk of a large secondary outbreaks. We've seen this in some countries like Israel, for example, or even across Europe. And we're starting to see numbers rise in the UAE. So what we're looking for in the next 3 to 6 months is trying to avoid these big fluctuations, but actually governments will try to shift policy on and off to create these versions of green or orange lines that you see on the slide. So it's going to be a pretty difficult period to monitor from a short-term kind of restrictions as well as normalization process perspective. And when we look at how much governments can restrict mobility and how well they can manage the impact on public health and healthcare system overall, as well as on the economy, this is the biggest test, right? To create this balance across the two big questions here. Early reaction, sharing of sufficient amounts of and good quality information, having a well-funded healthcare sector going into the crisis, and being able to direct sufficient emergency funds to this crisis, as well as being able to, of course, enforce the implementation of these guidelines. These are all very important factors that influence the ability of these countries to manage COVID-19 as well as the economy. What you see on the slide here is not a global comparison, but a regional one comparing markets to each other. And so countries with large fiscal buffers, pre-existing relatively developed healthcare infrastructures are better positioned, such as Saudi, UAE. But then Egypt and Algeria, we know, present very important opportunities for a lot of multinational companies. But you can see that their subpar response to COVID-19 will delay some fiscal improvements, will kind of limit population confidence, and also cause some challenges in healthcare sector normalization as well, which we'll discuss in detail later.
Thank you, Zainab. This is very helpful. I guess the next question is, COVID has affected government finances across the world. And in the Middle East, there's also the added component of the oil price shock this year. So we know there's been substantial disruption in terms of government revenues and overall tax earnings. Can you walk us through how the impact has been government expenditure, and also what that means for government policy across the region as well?
Yes, this is the main impact we've seen of the COVID-19 and oil price shock coming together. While the extent will vary, all countries will enter 2021 with higher deficits and debt levels. Even though COVID will ensure healthcare remains a priority, the fiscal constraints will definitely impact healthcare opportunities, either through pricing, reimbursement, or procurement decisions. And there's one thing around total financing, and we do need to look at more in depth around how these healthcare systems are financed. Clearly, oil revenues will significantly drive the financial pressures across three of the major markets here, but employment and consumer income dynamics will still impact Algeria and, most importantly, Egypt. And reducing this out of this very large out-of-pocket expenditure section in this chart is basically the main driver of Egypt's healthcare reform, and we'll see later on the country's reform plans and their ability to reach them. But overall, there's an impact on all forms of healthcare financing going into next year. But there's one thing around total financing, but second around the priorities that these governments have as they are reallocating these funds across healthcare. So looking into 2021, governments will need to rethink this balance of priorities in a post-COVID or with COVID-19 world, and aligning with governments on these priorities across access, costs, and quality will of course be essential to remain a preferred partner to the public sector. And so when we look at these three areas of priorities, here we want to compare the importance of these priorities relative to pre-COVID levels. And cost, we believe, is becoming more important of a focus for Saudi Arabia, with price increasingly coming up in negotiations. And this was already a sign from our client base, but now there's even more of that focus. The UAE has started to show some concerns over pricing, but will be looking to increase its position as a hub for research, innovation, and we think that there's more of a focus on that front. And the new national health program in Egypt aims to reform the entire sector as a whole. So increasing access, quality, were already quite important focus areas, but the Egyptian government will have to do this in a much more cost-effective way due to the magnitude of the project. So there's more of a focus again on cost. And in Algeria as well, the government will now face a unique challenge of raising the standards of quality to appease patients, but at the same time on a very small budget. So across the region, we do expect spending on healthcare to be relatively resilient, but there will be some, of course, severe fiscal pressures that will create financing challenges. Saudi, UAE, and Egypt all have plans to upgrade facilities, so this will have to be done on a slightly pressured budget, and then enhancing the digital agenda and supporting healthcare practitioners are happening across these three markets to varying degrees. Algeria doesn't have official plans to do so to the same extent. There were plans, for example, to upgrade hospitals, but they've been delayed due to political and now COVID and financing concerns, and when and how these are going to come back are still question marks. So we need to be watching out for that. But I guess it's safe to say that localization policies are unfortunately rising across the region.
Got it. Thanks, Zainab. And I think now is a good time for us to go around the 4 major markets across the region and do a little bit of a deep dive in terms of some of these dynamics that you summarized just now, Zainab. If we could start with Egypt, which of course is a very attractive market with a lot of potential, but a lot of reform that is still happening there. Maybe, Mansour, you can walk us through the outlook for the market and how you see COVID reshaping that.
Of course. So the severity of the shock to the healthcare sector means that the resumption of elective activities will be gradual, and key factors, including confidence and the capacity in itself, will dictate the pace of normalization in Egypt. Nearly half of the doctors questioned in an Egyptian cardiothoracic perspective survey closed their clinics between May and July. And though the government, yes, has greenlit the resumption, confidence amongst those physicians and the patients is so weak. The essential elements to actually boost physicians' confidence to reopen clinics and restart elective procedures are 3, and they include seeing a decline in the death toll, which is happening, but confidence in those numbers is still somewhat weak. The second one is seeing no new cases being reported, which is unlikely to happen anytime soon, unfortunately, as a second wave hits and hospital capacity remaining reduced because of those COVID pressures. And thirdly, effective vaccine or therapy availability, which is also unlikely in the immediate term, but we are seeing slowly a focus on COVID-19 treatments being used. So therefore, we are not expecting to see any solid boost to physician confidence, which leaves us expecting a rather gradual and inconsistent resumption of elective activities as opposed to a rebounding one. And now, upon return, we will be faced with new challenges, of course. And aside of the logistics and new health and safety regulations, which will be governing the healthcare sector through COVID-19, stakeholders will need to also manage the risk of slow normalization in supply chains. Now, slow deliveries and even stock uncertainty will create bottlenecks, which will act as another slowing factor in the resumption of elective activities. Because as we see market dynamics starting to shift and demand for non-COVID medical goods reemerge, we'll start to see that pressure building up in the supply chains. And though the government, yes, is introducing strategic warehouses and mechanized storage systems to resolve distribution issues, these solutions are not yet actually readily available. And in the next slide, we'll see in terms of the public focus. So public healthcare spending will continue to grow in 2021 as the government funds the national health insurance rollout, which means we are seeing growing spending in construction and upgrading hospitals as well as clinics. We're also seeing increased procurement as coverage widens. And finally, we're seeing a bigger wage bill for healthcare physicians, for HCPs. The priorities will, of course, change gradually with the rollout of this program. And we can look at it in terms of different periods. Starting with the short term, the government will focus on continued testing and procurement of the personal protective equipment, the PPE, as well as other COVID treatments. But we will also see the beginning of investments in localizing drugs, including those of the COVID-19 treatments themselves. But then as we move into the middle term, there will be more focus on expanding primary and secondary care providers in the phased national health insurance rollout, and we will see even digital solutions being invested in through either mechanizing stock controls, online consultations, or the digitization of medical processes and databases. And now finally, in the long term, we would expect to see continued therapy prioritization of diabetes, oncology, autoimmune diseases, and hepatitis C. And preventative solutions will become a more integral part of the general national health insurance objectives. And with those continually changing priorities, the implications will mean different demand spikes and troughs for various medical products and changing regulations. Egypt's three key healthcare priorities in the long term are expected to be expanding the healthcare coverage and reducing the pressure on the out-of-pocket spending. It will be also increasing efficiency and reducing the cost on the healthcare bill wherever possible. And thirdly, it would be to develop a national pharma production hub, allowing it to grow its pharmaceutical export abilities. And so with that, the demand, as we said, for medical devices will return more markedly in the final quarter or final third even of 2021 as priorities shift away from securing PPE and the other COVID-19 relatables. And particularly, construction will focus more on primary and secondary care in those new provinces. Now, COVID-19 has also confirmed to the government the very need for a strategy to centralize processes through the growing EDA, the Egypt Drug Authority presence. And so we expect to see heightened price sensitivity, more price reduction pressures, and increased competition. And we will also see more explicit reasoning to engage more with military-owned enterprises and military decision makers as they play a bigger role in the healthcare sector moving forward. And as part of the localization boost, we expect to see more incentives being given here to multinational companies looking to localize production, but also increased pressure as the government starts to favor more local produce in terms of registrations and pricing in order to actually achieve its localization ambitions.
Thanks, Mansour. I have a question for you, but before I ask it, I just wanted to remind the audience as well that if you have any questions or comments, you can always drop us a note by sending a message to Dhaka Frontier Webinars. We will take Q&A at the end. So if something comes to mind as we're going through this content, drop us a note, let us know, and we would love to answer that. So, Mansour, going back to what you were describing on Egypt, it sounds great, obviously quite an ambitious agenda. The question in my mind is, to what extent is this achievable, especially given the impact that COVID has had on the global economy and also in Egypt? Even if Egypt is not among the worst affected countries globally, it has had an impact. How much of this do you think is realistic, and how much of this do you think is promises but uncertain to what extent it will get implemented?
Of course, that's a very valid point to raise, because yes, as we speak about the change in public demand, we also would want to highlight the risk, and rightly do so, on whether the government will actually be able to afford it, particularly amidst all these fiscal pressures and these uncertainties, as you say. Now, the short and the medium term priorities are still incredibly costly spendings, especially if we're looking at tackling COVID, expanding coverage, or building even a domestic pharma market. And the government is assuming that the revenues will grow both this year and the next. But most of the state's income is actually coming from tax revenues through VAT and income tax at a time when consumption is falling, and the recovery of domestic consumption is actually expected to be only quite mild in the coming months. And so the risk of the government missing its revenues target has been around for a while. COVID-19 is just increasing the risk pressure even more, as you can see on that graph on the right. And just to give some more insight, the burgundy line represents the government's budget revenue targets, and the green columns represent the actual revenues. And we can see that the government has actually missed its own targets a number of times visually where you see the green column fall below the burgundy line. So yes, the risk of being able of not being able to achieve all the spending is a very valid one, and is a very explicit one, and it is part of our outlook for Egypt and for Egypt's healthcare sector. And so in summary, we would expect delayed payments in 2021, more price pressures for all stakeholders that are working with the public sector in Egypt, and definitely a very widening competition in the sector as well. And moving on from the public sector, we need to look into the risks also from the private side. The national health insurance is still in its infancy stages, and the out-of-pocket expenditure still makes up the majority of the healthcare spending in the country. And beginning with consumer confidence, it is weak and it is fragile, particularly in the middle income, which was only now beginning to actually recover. Maybe mid-2019 is when we saw that recovery start to really take place, of course, post the 2016 crisis. We expect to see mild recovery in consumer spending in 2021, but more price sensitivity in the middle income bracket. Whilst expecting some more resilience in the high earning income class, there will be also strong price sensitivity, particularly on the non-critical treatment, however. And therefore, we should monitor the drivers that will dictate consumer confidence, aside of the confidence of actually walking into those healthcare entities, into these clinics, into these hospitals. And those confidence drivers include the ones you see on the bottom right of the screen, which is firstly unemployment. That will be rising and will be creating more price sensitivity as, of course, spending confidence in households will weaken, which moves us swiftly on to the household confidence generally, which remains fragile despite small improvements, as we're seeing, unfortunately, income securities being very far from beginning to ease, acting as yet another pressuring factor on healthcare spending. And in particular, on this point, increasing the emphasis on promoting treatment effectiveness to pharmacists could reduce the risk of losing market share due to patients maybe starting to trade down or looking more into that option. And also another driver is, of course, currency-related purchasing power. Now, that one is not really changing because we're expecting to see a stable pound, so we see a neutral effect thus far on as a driver. And a slightly lifting factor is the government support to consumers, which is rising, including subsidies and public wages. But we're seeing the new regulations on the credit market, which could now allow for consumers to purchase credit premiums, to purchase insurance premiums on credit, which would ease that upfront spending pressure on the market.
Thanks,
and with
Mansour.
that, yeah, sorry.
No, I was just going to ask you to help us cover Algeria, where I know that in addition to the oil price shock and the COVID shock, we also have political uncertainty. So a lot of very complex dynamics, and we know that's a very important market from a healthcare perspective. So would love to hear your perspective on the outlook for Algeria as well.
Of course. So in Algeria, the government has allowed resumption of electives, but the gradual recovery of said elective surgeries will remain heavily dependent on actually the capacity of the sector more than anything else. Now, the country is slowly moving towards normalization after having 3/4 of elective surgeries being cancelled. And between April and August, hospitals were asked to increase their bed allocations to COVID-19 patients. And now we're starting to see a slow reversal of that, which will drive the resumption of those elective activities. Now, the government is moving COVID treatment to home care. So patients will remain at home rather than occupy beds, and hopefully succeed in cutting the infection chain and reducing the pressure on bed capacity. However, we should not be expecting a swift return to electives on the back of that. Yes, confidence amongst patients will grow as COVID treatments shift, but the patient's concerns of actually getting infected by the physicians is still there, particularly as the number of infected doctors and nurses is sadly rising. On the demand side, falling government revenues from the energy and the tax sources will force the country to actually cut back on its spending. There were already severe cuts actually in place to combat COVID and its effect, from that 25% cut in procurement to the 70% cut in investment and 50% reduction in operating expenditure. Now, we're not expecting to see any fast recovery in government spending beyond 2020 either. Instead, we are seeing a change of government policies as they try to adapt to the reduced energy revenues. This old policy of spending to support consumers and to protect state-owned enterprises has come to an end. Instead, the government is tightening its deficits and only prioritizing politically sensitive sectors such as healthcare and education. So for the time being, you should expect, again here, tougher price reduction pressures from the government as they actually struggle to contain the fiscal and the trade deficits. We should be expecting more delayed payments also in Algeria. And finally, we would want to readjust demand expectations as most of the investment funds that the government dedicated at the start of this year in 2020 to actually restart frozen construction projects from last year, most of those funds will likely be used up to spend on pharmaceutical and PPE, personal protective equipment imports instead, unfortunately. Now, Algeria has to balance extending the reach of its healthcare coverage, but on a smaller budget, albeit whilst tackling a severe fiscal crisis. So the priorities are shifting. Procurement priority in the short term will be given, as we said, to PPE and COVID treatment, particularly as infection rates remain elevated. But the government will look to cut down on its import bills drastically, particularly on generics. Thus, the focus on procurement cost efficiency is climbing to the top of that list. Whilst construction projects will resume only late 2021, focusing on the periphery to limit any new fuel for protesting will be that priority in this subject. All projects were paused due to the pandemic and will only return gradually. But as a priority, it is falling behind other key objectives right now. Localization approaches are changing as it is deemed to be a long-term solution to actually being able to cut costs. And the government will support its local producers and aim to increase Saidal's market share. Now, in the industry, multinationals will be incentivized to localize through tax breaks as the government pursues what is known as a carrot and stick approach. For digital solutions, we expect a continuation of the same with a focus on resolving stock monitoring issues in order not to over supply the market as well. And finally, as a new priority that has been growing is to support healthcare physicians through slightly improved pay and bonuses, but the pressure on HCPs, on healthcare physicians, has been growing and will continue to do so through at least the first half of 2021. And so the risk of the burnout to those physicians is going to remain with us, forcing us to change our approach towards them.
Great, thank you very much, Mansour. If anybody in the audience listening today has any questions or follow-ups on Algeria, just drop us a note under Dakar Frontier webinars. We will run a Q&A at the end of this conversation. But of course, you're all probably waiting to hear about the view on Saudi, the most important market in the region, where there have been substantial changes in terms of both the funding outlook as well as the overall economic environment. So I'll pass it back to Zeynep to walk us through what we can expect from Saudi in the next 12 months.
Perfect. Yes, and as it stands currently, more than 90% of Saudi Arabia's cases have recovered. The daily infection rates have also been decreasing since early August. Field hospitals and some hospitals with COVID-19 wards were seeing some of their latest patients recover as well. So we are starting to see that COVID environment start to subside. And as the government was trying to contain the virus, which had reached around 5,000 cases a day at one point, it has also been spending on healthcare and on the economy. So various additional resources had been provided to both healthcare facilities and supporting private sector firms. And we see that quite a lot of focus has been put on ICU capacity to increase that response to COVID-19. So after all of that spending, now we are seeing the decline on COVID-19 and starting to see some of the opening up, with public sector offices returning to their physical offices and some flights finally opening up as well. And this is starting to give some confidence on kind of elective surgeries, but there's still quite a bit for us to look at in terms of the public sector impact. And it is probably the largest, Saudi Arabia is probably the largest opportunity for firms across the Middle East Africa region, but there has to be some fiscal pressures that we need to put into our plans. Pre-COVID budget had already anticipated falling oil revenues and total expenditures each year until 2022. Basically, we're budgeted to fall by around 3%. And we know that this year oil revenues are likely to be around 40% lower and will probably remain quite muted in 2021. The VAT hike, unfortunately, has limited benefits because the economy is weak, consumption is weak, and religious tourism is going to be quite slow to return. Now, amid these financial concerns, healthcare has been receiving definitely increased public funding, but very much focused on COVID-19 management. So in Q2, 24% increase in healthcare services, but again, focused on emergency response. Beyond spending, the government is looking to ensure access and coverage across the population as well, considering we will be in COVID-19 response mode for the next 6 to 8 months. This kind of resource allocation and prioritization of COVID should still be expected. The main financing impact is not just on the public side, but also on the private side. Now, there were long-term plans to expand private healthcare financing through private insurance expansion, but this is the main area that will be delayed due to weak labor markets, weak employment, and just weak economic dynamics. Insurance providers themselves are also going under quite a lot of pressure, and so unfortunately, delays to expanding that healthcare financing base should be expected. The structural transformation here is not happening. We expect the government to focus on COVID-19 related areas, as I've mentioned, in the next 3 to 6 months in terms of spending, but this will also result in a longer term focus on infectious diseases as well, as part of the government's kind of longer term healthcare priorities. And of course, this environment has really increased the importance of digital solutions and digitalization in the healthcare sector, which will continue. But at the same time, we will see that expansion of primary healthcare goal coming back on the agenda now going into the next 2021 and beyond. And in the longer term, diabetes, oncology, cardiovascular diseases, some of the traditional disease areas still remain important for the government. And this high quality focus is still there. It's just that fiscal pressure that we need to manage with that. But the kind of pre-existing healthcare priorities actually remain quite the same. And when we look at the priorities, again, it will be important for us to monitor how cost pressures are affecting the country's pricing structure in the future. We want to be aware of some potential news coming up on changes to that pricing mechanism. And at the same time, COVID-19 has strengthened and confirmed the role of NIPCO and centralization of procurement. So definitely more power there for us to assume. And as you know, there were plans to set up a cluster-based model in the healthcare sector. The legal preparations there will continue, but lack of progress on privatization and policymaker distraction will likely delay the implementation here. And the previous trade wars and now COVID-19, they're accelerating a trend of supply chain localization across industries and across the world. And Saudi Arabia, having one of the larger pharma manufacturing capacities currently in the region, this country is likely to see a slightly, of course, more important rise in domestic production. Now, the opportunity can be an attractive factor here, but from our client base, we're still hearing concerns around IP protection, labor costs, general regulatory unpredictability as well. And digitalization, I guess the word of the year, it was already a goal for the government, but it is definitely accelerated goal across especially healthcare, but also broader public sector as well. A variety of solutions have been adopted, as you see on the slide here, mainly to improve reach to patients, but also gradually to improve healthcare services as well. So this is going to be an important area that the government will look for support from the multinational.
Great, thank you very much, Zainab. I think we'll want to probably circle back to Saudi and discuss it in a little bit more detail towards the Q&A section, but I think it will be helpful to round out the country view by looking at the UAE as well as another major market within the Middle East portfolio.
And for the UAE, we've seen an important disruption again to the healthcare sector at the height of COVID. But now, although major restrictions have been lifted, the stop-start dynamics and fluctuating confidence will definitely ensue and will be with us for the rest of the year. We're seeing cases continue to rise, unfortunately, and the government is looking for ways to limit this increase without another lockdown. So an important level of short-term monitoring we still have to be doing. And in the meantime, the government had definitely stepped up support for the economy especially, and we need to kind of start to see how this is going to impact the public and the private side moving forward. Now, in terms of priorities, again, we expect the government to focus on COVID-19 related areas for the next 3 to 6 months. And here again, we also expect a lasting focus on infectious diseases, more research focus and resource allocation towards this. And the current environment has, especially for the UAE, has definitely increased the importance of being able to locally supply some of the basics, whether it's food items actually, or healthcare items, medical devices and pharmaceutical goods. So we would expect to see some increased focus on expanding local production, but also the use of digital solutions. Very much a focus for the government. And in the long term, again, some of those traditional areas of therapy priorities continue to stay with us. Now, preventative healthcare and personalized healthcare as well, some of the more research-driven and innovation-driven healthcare solutions. These are going to be, we believe, quite important priorities for the government. And expansion of electronic health records and that digital adoption is very much a part of the UAE's broader growth model moving forward into the future. So this is not just important for the healthcare sector, but overall for the government to be able to boost the economic growth in the country. Cost is also a concern in the UAE with the falling revenues, as you would expect. Amidst all these announcements about innovation, the cost trend is there in the background, but this is not at the forefront of negotiations as we would see in Egypt or Saudi Arabia. So depending on the product portfolio of firms, the price pressure is going to be quite different. And the 3 key pillars of healthcare policy in the UAE will be definitely around boosting localization, innovation, and medical tourism. We see that some of that innovation is currently focused on COVID-19, but investments are going into new research centers, producing high quality and innovative medical device and pharmaceuticals as well. So this is just the beginnings of this, but we'll start to see more effort in the next kind of 5 years on this area. Localization is also rising in importance with short-term focus on essentials, but the general aim here is to definitely save on products that are way less sophisticated through local production. Medical tourism is a key focus with quite a lot of funding going into external marketing and partnerships. And again, the pace of growth here will depend on COVID-19, but at least in the meantime, the government is showing good management on the healthcare side, trying to give confidence to the world, and starting to work on increasing capacity, but also definitely marketing as well. And digitalization, very important focus for the UAE as well. This is, as I've mentioned before, not just a healthcare priority, but critical for the country's new growth model. And innovative models and ways of production of services are going to be an important area that the UAE aims to be a hub for the region. So clearly this is going to be an area that will receive quite a bit of resources and attention from the government, whether it will be to help improve access, to create cost efficiencies, or enhance the quality of services. The multinational companies that can help the government, Dubai Health Authority, and especially Abu Dhabi as well, they will definitely be at a better advantage in terms of capturing the opportunities in this market.
Great, thank you very much, Zainab. So I think it will be helpful to actually look at the bigger picture here across the Middle East region. You and Mansour have covered some of the changes that are happening in the major markets. Some are actually opportunities for businesses, and digitalization seems to be one of it, but also changes in the procurement processes, etc. What are some of the things that you see multinationals in this healthcare space doing as they are rethinking their strategy, following up on COVID, and also trying to really position themselves for success in this environment?
Yes, and there's definitely a lot of planning taking place right now, trying to pinpoint key trends that are going to be staying with us for the next few years, and then focusing the actions on that. And at least if we summarize, as you mentioned, Martina, some of the broader regional trends, we can say that fiscal strains are going to be prevalent across the region. Policies to centralize procurement have definitely been confirmed as correct priorities for the government from their perspective, and so will get more attention. And stakeholder engagement clearly will be a hybrid between online and offline, but we are hearing from our client base there's a very heavy focus on trying to return to in-person interactions as quickly as possible. And there will be pressures to reduce supply chain vulnerabilities. So again, localization pressures across the region. And then we will want to see in which countries this becomes even more of a priority. We've talked about some, but infectious disease therapy areas definitely going to be attracting a bit more funding, but there are key disease areas that have to be priorities for the government that were there already. And then medical tourism, the opportunity here definitely varies across countries. The one important one we can call out as the UAE. Now, to prepare for this kind of an environment, we are seeing multinational companies evaluate this digital in a more realistic way. We know that from a marketing, from an engagement perspective, this is important in the short term, but the real opportunity is if this can actually help multinational companies support government priorities through the solutions that they bring, which is a longer term solution or longer term strategy, but definitely evaluated by executives in the region. And then internal alignment is necessary. Currently, a lot of companies are in this process. A lot of the assumptions made today will have to be updated and revised in the first half of 2021, or at least pressure tested. But changing demand and price assumptions are definitely areas that need alignment on. And governments are likely to be, of course, more responsive to any company that can help them improve on these priorities, and local teams that can really integrate government priorities into their sales plans basically are going to be better able to win in this region. But what we really need to see is companies reassessing their market and customer segment prioritization, their key product areas that they will want to see growth from, key countries that they expect to increase investments to be able to better capture the opportunity. So a reassessment of those top priorities could be necessary.
Great, thank you very much, Zainab. So with that, I think it's time for us to go to the Q&A. So if anybody on the line would like to ask a question or make a comment, please drop us a note under DACA Frontier webinars. And I would like to start with one question that we got a little earlier for the Egypt section. Mansour, this one I think is for you. And it's really trying to understand currency stability and FDI in Egypt, looking at 2021, 2022, especially keeping in mind the different fiscal year in Egypt.
In terms of the currency, we are expecting to see a continuation of the stability in the Egyptian pound for over the next 2 years. We could see some small depreciation, maybe closer to 17 pounds against the $1 US. But this stability will be supported by the central bank pumping more dollars into the market and reducing the pressure on the pound. And also we're seeing that appetite in Egyptian issued bonds remaining high. So there is enough inflows, as per our expectations, enough inflows coming into the country to maintain that stability in the currency. Of course, there is always the risk of seeing some volatility. That risk right now is low, and that could possibly come from another emerging market sell-off like the one that we saw in April, May. But for the time being, we are expecting to see that stability through at least till 2022.
And Mansour, do you see a trend towards companies planning investment in Egypt for next year? Is that on the books, or is it a little too early to ask?
Well, no. In terms of foreign direct investment in particular, there is enough interest from the foreign community in Egypt. At this moment in time, we've seen that investors have taken back their second foot out of the door, just in anticipation, waiting to see what could happen to Egypt through COVID. But we're expecting to see foreign investment come back into Egypt maybe towards the end of next year. And if I could add, particularly in the healthcare and the tourism and the energy and in the construction sectors, those are the prime sectors that are catching the eye of foreign investors in the country.
Perfect, thank you. One more question for you, Mansour, and I think that might be our last one for today's session, about Algeria. We didn't talk in detail about the political situation there, but could you give us a sense of where we are at and what kind of impact it might have on healthcare companies?
So politically speaking, Algeria is entering a very political sensitive few months coming ahead now into October, November and December, particularly as we're seeing the constitution referendum, the electoral law review and the early legislative elections take place. So far, the changes in the constitutions that have been broadcasted do not really imply any significant scale back in protesting, because the changes that have been said or mentioned are falling short of any meaningful plans to tackle corruption and cronyism, which are some of the key protesters' demands. Now, a lot will hinge on what will be changed in the electoral law review. We are hearing that there are intentions in removing representative quotas and increasing that scrutiny of political funds, which previously actually allowed some room for electoral corruption to thrive. So if we do see effective improvements, particularly in the electoral law changes, then we could see more protesters' demands being answered and some more easing in the protests. But as we enter 2021, protests will remain with us in some shape or form, but that magnitude will depend on what happens in November. More related to healthcare, the way that the government has responded is driving some criticism. So we could see some of those protests in terms of, particularly in the periphery, as we saw a couple of years back, driven by dissatisfaction of the healthcare quality in the country.
Great, thank you very much, Mansour. Thank you, Zeynep, as well, for the presentation today. I think with this, we will be wrapping up. For everybody listening in on the line, You will be receiving a recording of the presentation within 24 hours. You can also view the materials that we showed or share them with the colleagues and much more on our new mobile app, which is available for download right now on iOS and Android. For anybody who is not a FrontierView customer at this point, if you would like to reach out to us for complimentary access to our suite of resources, including data, dashboard tools, and market monitoring reports, please email us at info@decafrontier.com, and a member of our team will be in touch. Thank you, everybody on the line, for joining us today, and we look forward to speaking with you again soon.